Welcome to RichTricks. I am your rich guru, Mr. Mio. Let's get started with today's video on making money online.
Hello guys, welcome back into another video guys. So on this channel we discuss about finances and how you can make money online guys. So if you want to make money online, make sure you give a like and subscribe to our channel so that you won't miss on our latest drop guys. So on today's video we want to talk about how to use technical analysis to trade forex like a pro. So now let's go to the next page. So trading forex without understanding technical analysis is like trying to drive with your eyes closed. You are basically guessing. So if you want to trade like a pro, you need to learn how to read the language of price action. So technical analysis helps you make smarter trading decisions by analyzing charts, patterns, indicators, and volume. So instead of relying on emotions and guesswork, it doesn't predict the future, but it gives you a framework to understand what the market is likely to do next. So now let's go to the next page now and let's see the steps. So the first steps I have here is start with right chart setup guys. So before you analyze anything, you need to set up your charting platform. So tools like TradingView offers powerful visual analysis features. So choose candlestick charts, not line charts, because they give you more information about price movements. Use a clean background and avoid cluttering your chart with too many indicators. So the goal is clarity. Start with key time frame, the daily chart for bigger trend context, and the 1 hour or 15-minute chart for entries and exit guys. As you can see right here in the chart, so this is a daily chart. Let's switch to daily. So you can see this is a support and a resistance line. So all these things are what you need guys. So this is a trading view. So now let's go to the next step, right? So the next step here says understand trend line and market structure. The first thing a pro looks for is a trend. Is the market moving up, which also called bullish, or down, which also called bearish, or sideways, which also called consolidating? So identify these by looking at swing highs and swing lows. In an uptrend, price makes higher highs and higher lows. In a downtrend, it forms lower high and lower low. So avoid trading against the trend. It's like swimming upstream. Use trend lines and moving averages like the 50 days or 200 MAs to confirm the market's direction. So guys, as you can see right here, this is what is meant by trend. You can see this is a lower low, lower high, lower low, lower high, lower low, lower high. So right here, from here to this point, the trend is on downtrend. So right here you only look for sell, and when you check the price right now, higher high, higher low, higher high, higher low, higher high. So low, high, low, high, higher high, higher low,
Welcome to RichTricks.
higher high,
I am
higher
your
low.
rich guru,
So
Mr. Mio.
right here you
Let's
can
get
see
started with today's
a
video on
uptrend right
making money
here, and
online.
this is a consolidating market guys. So this is how to identify your chart guys. So it's not rocket science. So now let's go to the next step. The next step here says master support and resistance zone. Support and resistance zone are key levels where price often reacts, either bouncing or breaking through support is where the price tends to stop falling, or demand zone. So and resistance is where it tends to stop rising, which also means support zone. So draw a horizontal line on your chart where price has reversed multiple times in the past. So these zones help you time your entries and exits. So professionals often wait for price to test this level before jumping into trade. So as you can see here for an example, so this is a support line. Let me just put it here. So this is the support line right here, and you can also call it a resistance line right here, because when the price breaks, the price come back to retest. So at this part it forms as a resistance line, and at this part it forms as a support line. So that is how to draw your support and resistance line, guys. So now let's go to the next step. The next step here is step 4. Set entries, stop loss, and take profit points. Never enter a trade without a plan. Use technical analysis to define your entry level. So stop loss and take profit before placing the trade. Your entry should near key levels like support or trend line. Your support loss just below invalidation point where your trade idea is no longer make sense. So, and your take profit based on logical target like the next resistance or measured moves. Pro traders always think in terms of risk to reward, so aiming for at least 1 to 2 or 1 to 3 ratio. So as you can see right here, this is our previous entries, guys. So this is what we called, let's check it right here. So this is our risk reward ratio, guys. So as you can see right here, this is 1 to 2 risk reward ratio. So this is how to put your risk reward ratio, guys. So now let's go to the next step. So the next step is backtest your strategy before trading live. So once you build your system using technical analysis, test it, go back to historical data and see how it performs. So would your setup have worked? How often? What's your win rates and average returns? So backtesting help you build confidence and refine your head. So don't risk real money until your setup works consistently in simulated conditions. So what you just need to do is backtest, like draw the chart of the previous chart and then backtest and see if you have a winning strategy, guys. So that's just all about forex, guys. So now let's go to the next step. Now the next step here says stay patient and avoid over trading. So pro traders don't trade every day, they wait for quality setup. Most of the time the best trade is no trade. Technical analysis
Welcome to
isn't about
RichTricks.
predicting
I am
every
your
move,
rich guru,
it's about
Mr. Mio.
spotting high probability
Let's get started
movements
with today's video
and
on making money
executing
online.
with discipline. So if your setup isn't present, stay on the sideline. Emotional trades, FOMO entries, and random guesses destroy your head, guys. So always stay patient when you want to enter a new trade. And let's go to the last page right here, which is review your trade and improve. So after every trade, review your chart. Do you know analysis works? Do you follow your rules? Keep a trading journal and log your entries, exits, mistakes, and lessons. So over time, these feedback loops will help you sharpen your technical skills and trade more like a profession. So that will be all for today's video, guys. So if you enjoyed this our video, make sure you like and subscribe, guys. And with everything we just discussed now, I'm sure you should be able to identify your chart now and make money in the forex market, guys. So see you next time. Hello guys, welcome back into another video, guys. So if you are new to this channel, make sure you like and subscribe, because on this channel we discuss about investment and financing, guys, how you can make money online and all. So in today's video we're going to be discussing about best investment strategies in a recession. So now let's go to the next page now. So recession is scary. Market falls, jobs are lost, and uncertainty creeps in from every angle. But for smart investors, recession also creates once in a decade opportunities. So while everyone else panics, you can take a calculated approach that protects your money and even positions you to grow it. So here is a breakdown of the most effective investment strategies during a recession, built on principles of risk management and long-term thinking and financial discipline, guys. So now let's go to the next page now. So the first one I want to talk about is focus on high quality recession proof stocks. So during a recession, not all companies suffers equally. So some business, especially those in customer staples, health, utilities, and discount retail, tend to remain stable because people still need their products no matter what the economy is doing. So these are often called defensive stocks. So companies like Johnson and Johnson, Procter and Gamble, and Walmart are known to hold up during downturns. So these stocks may not deliver explosive return, but they are far less likely to crash, making them a solid foundation during uncertain times. So these are the stocks you can buy and keep for long-term use. So now let's go to the next page now. So number two says invest in dividend-paying stocks for income stability. So when market falls, price may drop, but dividend can keep coming. So that's why dividend stocks are a smart playing
Welcome to
during a
RichTricks. I
recession
am your rich
because
guru, Mr. Mio.
companies with a long
Let's get
track
started with
record
today's
of
video on making
consistent
money online.
dividend payment, known as dividend aristocrats, tend to be financially healthy and well managed. So their dividend offers passive income and can help cushion portfolios losses. So reinvesting those dividends during market lows can also compound your return faster once the economy recovers. So now the third one I have here for you is dollar cost averaging. So one of the simplest yet most effective strategies during a recession is dollar cost averaging. So consistently investing a fixed amount regardless of market conditions. Instead of trying to time the bottom, you buy at different prices over time. So this reduces the impact of volatility and averages out your cost basis. So DCA is especially powerful when investing in broad markets ETFs like the S&P 500. So because you are automatically buying more shares when prices are low and fewer when they are high, building wealth slowly but steadily. So keep that at the back of your mind. So now let's go to the next one now. The next one here is keep cash ready for buying opportunities. So cash is underrated during recession. So while it earns little return on its own, it gives you flexibility, and flexibility is power. So when everyone else is selling in panic, cash gives you the ability to buy quality assets at deep discounts. So consider keeping a portion of your portfolio in a high yield saving account. So money market funds or short-term bond ETF. So think of cash as your dry powder. So fuel for your best investments when the market is down. So now let's go to the next one. The next one I have here for you is diversify across asset classes. So recession impacts different sector and asset classes in different ways. So a smart recession strategy includes diversification. So spreading your investment across stocks, bond, real estate, precious metals, and even cash. So bonds, for example, often perform better than stock during downturn, especially high quality government or investment grade corporate bonds, because gold and silver tend to hold their value or even rise when equities fall. So diversification doesn't guarantee profit, but it reduces the chances of large losses by not putting all your eggs in one basket. So now let's go to number 6. Number 6 here says consider defensive ETFs and low cost index fund. So if picking individual stocks feel overwhelming, recession puffs ETFs are a great alternative look for ETFs focused on dividend growth, consumer staples, utilities, or healthcare sectors. So funds like VIG, XLP, and XLV offers instant diversification in stable sectors. So low-cost index funds like VTI or SPY also let you ride out market turbulence while keeping fees low. So crucial during downturns when every percentage point counts. So keep that in your mind. And the last one on the list is invest in yourself. Low risk, high return. So one of the smartest investments during a recession doesn't involve the stock market at all. It is you. Use this time to learn a new skill, earn certifications, or even switch into more recession-resistant industries. Whether you are boosting your income potential, starting a side hustle, or a small business, investing in your own knowledge and earning power can yield return far greater than any stock or ETFs. So in tough economic times, so the best edge against uncertainty is adaptability. So you need to be able to adapt. When you learn more, then you have vast knowledge about a lot of stuff. So now you can know how to position yourself during recession. So when you do that, that means you are one of the 1% that recession won't really affect, because now you know what to do, you know what to invest in, you know how to diversify your income, your earning, so the losses won't be huge, or there will even be no losses at all. It depends on you. So invest in yourself today, because that is the best thing you could ever done for yourself. So now that will be all for today. If you enjoy our content, make sure you give a like and subscribe to our channel. Hello guys, welcome back into our channel guys. So if you are new to this channel, make sure you like and subscribe, because in this channel we talk about finances and how you can make money online guys. So make sure you like and subscribe so that whenever we drop, you will be one of the first people to know guys. So in today's video we are going to be talking about, is Bitcoin still worth buying in 2025 guys? So now let's go to the next page. So Bitcoin has been around for over a decade, but the question still remains, is it too late to buy, or is there still room for growth in 2025? So with the explosive gains of the past, the brutal crashes, institutional adoption, and regulatory debates, many investors are wondering whether Bitcoin remains a smart move or just a risky speculation. So the short answer is yes, Bitcoin is still worth buying in 2025. So, but only if you understand what it is and why it matters and how to approach it strategically. So now let's go to the next page now. So the first thing I want to talk about is Bitcoin has evolved beyond a tech experiment. So Bitcoin is no longer just a niche internet currency used by a handful of tech-savvy libertarians. So in
Welcome to
2025,
RichTricks.
it's
I
now
am your rich
widely
guru, Mr.
adopted
Mio.
as a digital
Let's
store
get
of
started with
value,
today's
often
video on
referred
making
to
money
as
online.
digital gold. So major financial institutions, payment companies, hedge funds, and even governments now hold or interact with Bitcoin in some form. So it's integrated into ETFs used in cross-border payment solution, and has proven its resilience through multiple booms and bust cycles. So that kind of staying power matters. It means Bitcoin isn't a passing trend. It's become part of the global financial conversation. So the next thing I also want to talk about is scarcity still drives value. So one of Bitcoin core strengths is its built-in scarcity. So there will only be 21 million Bitcoin, and over 19.7 million have already been mined by 2025. That means over 93% of the total supply is in circulation. So the supply is fixed, but demand continues to grow. So particularly during period of inflation, currency devaluation, and economic uncertainty, as central banks continue to print money, Bitcoin stands out as a non-inflationary, decentralized asset. Simple supply and demand economics suggest that as demand increases and supply tightens, value tends to rise. It's just a simple economics. So now let's go to the next one. The next one here says halving effect still matters. Every 4 years, Bitcoin undergoes a halving event where the reward for mining new coins are cut in half. So the movement halving occurred in April 2024, reducing the block reward from 6.2 BTC to 3.125 BTC. So historically, these events have been followed by major bull run roughly 12 to 18 months later. In 2025, we're in the typically post-halving accumulation phase, so which in past cycles has led to massive gain. That doesn't mean it's guaranteed to happen again, but if history repeats or even rhymes, 2025 could be a strong setup year for long-term upside. So now the next one here is volatility remains, but so does opportunity. So Bitcoin is still volatile. Even in 2025, 10% daily movements aren't rare, but that volatility also creates opportunities. Benefits from the swing and long-term holders so can buy the dip and hold through cycles. So the key is to not treat Bitcoin like a lottery ticket. Instead, treat it like a long-term high-risk growth asset, similar to early-stage tech stocks. So use dollar cost averaging to spread out your entries and never invest more than you are willing to lose with the right mindset. So volatility becomes an advantage, not liability. So now let's go to the last one. The last one I have here is, so is Bitcoin still worth buying in 2025? Of course my answer is yes, but with strategy, patience and perspective. If you are looking for quick gains, Bitcoin isn't the guaranteed win, but if you believe in decentralized system, digital scarcity, and the long-term adoption of blockchain-based assets, Bitcoin remains one of the most compelling investment opportunities in the world. So it's no longer a fringe bet. It's becoming core part of diversified
Welcome to
portfolios for
RichTricks.
both
I am your rich
individuals
guru, Mr.
and
Mio.
institutional guys.
Let's get
So with
started
the
with
help of
today's
my
video
video,
on
I'm
making money
sure that you
online.
should be able to know the answer to your question now, guys. So if you are new to this channel, make sure you like and subscribe, and see you next time. Thank you for watching. Hello guys, welcome back to our channel, guys. So if you are new to this channel, make sure you like and subscribe, because on this channel we discuss about finances and how you can make money online. So if you are new, make sure you like and subscribe. So in this channel we're going to be discussing about 5 personal finance hacks that are saving people millions. So now let's go to the next page. So managing money doesn't have to be complicated, and in 2025 it isn't. So thanks to a new generation of smart personal finance apps, so people around the world are finally getting control of their budget, paying off debts, investing wisely, and building real wealth. So all from their phones. The right app can replace your spreadsheet, your accountant, and even your financial planner. So which tools are actually making a difference? Here are 5 personal finance apps that are quietly saving users millions of dollars, and how they can work for you too. So now let's start with number 1. So number 1 here says you need a budget. So if budgeting ever felt overwhelming or boring, you need a budget will change your mind. Okay, this app isn't just about tracking your spending, it helps you give every dollar a job. You need a budget encourages proactive budgeting by focusing on priorities, goals, and financial awareness. So the result, users consistently report paying off thousands in debt and finally breaking the paycheck to paycheck cycle. So you need a budget. It doesn't just tell you where your money went, it shows you where it should go next. And in a world full of impulsive spending, that kind of control is priceless. So now let's go to the next one now. The number 2 here says Rocket Money, or formerly True Bill. So ever signed up for a free trial and forget to cancel, you are not alone. So Rocket Money is a game changer for subscription management. So it automatically detects recurring payment and gives you the option to cancel, negotiate, or downgrade service with a tap. So it also helps you lower your bill, track your credit score, and organize your expenses by category. So thousands of users have saved hundreds of even thousands per year just by letting Rocket Money clean up their digital spending. It's like having a money saving assistant in your pocket. So now the third year on the list is Acorns. So if saving feel hard, Acorns make it automatic. So this micro investing app round up your purchasing to the nearest dollar and invest the change into a diversified portfolio. Buy a coffee for $3.60. Acorns round it up to $4 and invest the extra 40 cents. Over time, those small amounts grows into something significant, all without you thinking about it. It's perfect for beginners, busy
Welcome to
professionals,
RichTricks. I
or
am your rich
anyone
guru,
who
Mr.
struggles
Mio.
to save
Let's get
consistently.
started with today's
Acorns
video on
turns
making
small
money
change
online.
into long-term wealth with zero effort. So number 4 on the list is Empower. So formerly Personal Capital. Want a bird eye view of your entire financial life? Empower gives you that and more. It tracks your income, expenses, bank accounts, credit cards, investments, and even retirement saving all in one clean dashboard. But its biggest strength is investment and net worth tracking. So it shows your assets allocation, fees, and long-term growth, helping you spot weak spots and optimize your portfolio. So Empower gives you the clarity you need to make smart financial decisions, whether you are building wealth or planning retirement. So the last one on the list here is Splitwise. So money and relationship don't always mix, but Splitwise make it easier. This app is designed for splitting expenses between friends, roommates, or travel groups. So whether it's rent, groceries, or a group trip, Splitwise keeps everything fair and transparent. No more awkward, you owe me, text or forgetting IOUs. So it helps people avoid unnecessary arguments and settle up smoothly. And when you are managing shared finance, peace of mind is just as valuable as dollars saved. Now you have the information on your hand, so make sure to put it into use, guys. So that will be all for today in this video, and don't forget to like and subscribe to our channel, guys. See you next time. Hello guys, welcome back into another educative video, guys. So in today's video we're going to be talking about understanding candlestick pattern for beginners. So if you are new to this channel, make sure you like and subscribe, because on this channel we discuss about finances and how you can make money online, guys. So now let's go to the next page. If you want to trade stock, crypto, or forex like a pro, learning how to read candlestick pattern is essential. Candlestick charts are more than just fancy visuals. They are a powerful language of price action that traders use to understand what the market is really doing. They show not just where the price is, but how buyers and sellers are battling in real time. So for beginners, mastering candlestick pattern might seem intimidating, but once you get the hang of it, you will never look at the chart the same way again. So now let's go to the next page. So what is a candlestick and why does it matter? So a candlestick represents a single time period, like 1 day, 1 hour, or even 1 minute of price movement. Each candlestick shows 4 key pieces of information: the opening, the closing price, the highest price, and the lowest price during that time. So the body of the candle shows the range between the open and close, while the time line, called wick, or shadows show the high and low. So if the candle is green or white depending on your chart, it means the price closed higher than its open, a bullish signal. And if it is red or black, it means the price closed lower than its open, a bearish signal. So it is that simple but very powerful, guys. So now let's check out the image here and see what we are talking about. As you can see here, so this is the eye of the candle and this is the open, guys. So this is a wick or called shadow, guys. So this is the body, so this is a bearish candle, guys, and this is where the price closed. But before the price closed, this is the highest low, guys. So this is the highest low the price get to before the price come back here to close. So this is also called wick or shadow. So same thing for the bullish candlestick, guys. As you can see, high, low, open and closed. So that's just simple. So now here is a details, easy to follow breakdown of understanding candlestick pattern for beginners. So now let's go to number one. The number one candlestick we want to talk about is the doji, indecision in the market, the doji candlestick. So the doji candlestick is one of the simplest and most common pattern. It forms when the opening and closing price are nearly equal, creating a candle with a small or non-existent body and long wicks. So this pattern tells you that neither buyers nor seller had control. It's a signal of indecision or potential reversal. So if you see a doji after a strong uptrend or downtrend, it could mean the current move is losing steam and a reversal may be coming. So now let's take a look at the picture. So as you can see, this is a doji candlestick. So this is an indecision candlestick. So it doesn't matter, it can come in this way or this way, but this is a doji candlestick, guys. So get familiar with it. So now let's go to number two now. Number two here says hammer and angry man. So the hammer is a bullish reversal pattern that appears after a downtrend. So it has a small body and a long lower wick. Shows that sellers push the price down, but buyer fought back and closed near the high. So that shift in momentum can be a powerful buy signal. The hanging hammer looks the same but appears after an uptrend, and in that context it's a bearish warning. The key is where the pattern appears, not just how it looks. So now let's check out the image. So this is a hammer, guys, and this is a hanging hammer. So now let's go to the next one now. The next one here is bullish and bearish engulfing, strong momentum shift. So the bullish engulfing patterns happens when a small red candle is immediately followed by a large green candle that completely engulfs the previous one. So it shows that buyer overwhelmed the seller, and it often signals a shift from downtrend to uptrend. The opposite is the bearish engulfing, where a green candle is swallowed up by a bigger red one. So a sign that sellers are taking control. These are high impact patterns that traders watch closely at support or resistance level. So now let's check out the image. So this is a bullish engulfing candle. As you can see, it engulfs this bearish candle, and here is a bearish engulfing. As you can see, it engulfs this bullish candle. So it's just as easy as that. So now let's go to the next one. The next one here is morning star and evening star trend reversal pattern. So the morning star is a 3-candle bullish reversal pattern. It starts with a long red candle followed by a small bodied candle like a doji or spinning top. So and end with a strong green candle. So this signal is a transition from selling pressure to buying strength, a classic bottom formation. So the evening star is the bearish version, often seen at the top of an uptrend, signaling a potential price drop ahead. So now let's check out the image. So this is a picture of an evening star. As you can see, a bullish candle here. So let's just say we are in an uptrend. Then you see evening star. So this is an evening star, and this is a morning star. The price is in a downtrend. Then you see a candlestick. So this is a morning star. So now let's go to the last one. The last one here is the shooting star, bearish rejection. So the shooting star is a single candlestick pattern that show rejection of higher price. So it has a small body near the bottom and a long upper wick, so meaning buyers try to push the price up but were overwhelmed by sellers before the candle closed. So it often appears after a bullish run and can warn that a reversal is near. So it's especially effective when paired with resistance zone or overbought signal like RSI. So now let's check out the image. So this is the image of a shooting star. As you can see, this is a bullish trend. Then you see shooting star. What happened? The trend shifted to a bearish sign. So it's as easy as that. So I know you might feel overwhelmed, but when you keep learning and practicing, guys, all these things will become easier to you. You get familiar with all these candlestick patterns, guys. So that will be all for today in this video. So make sure you drop a like and comment down below, and I'll see you next time. Hello guys, welcome back into our channel, guys. So in today's video, we're going to be talking about what is dollar cost averaging and how to use it, guys. So you don't want to miss out on this video, guys. And if you are new, make sure you like and subscribe, because on this channel we talk about finances and how to make money online, guys. So now let's go to the next page. So investing can feel overwhelming, especially when markets are swinging up and down. So most people worry about buying at the wrong time, losing money, or not knowing when to jump in.
Welcome to
So
RichTricks.
that's
I am your
where
rich
dollar
guru, Mr.
cost
Mio.
averaging or
Let's get started with
DCA
today's
comes
video
in.
on making
So
money
it's
online.
one of the simplest, most effective investing strategies for beginners and pro alike. So whether you are buying stocks, ETFs, crypto, or even gold, DCA takes the emotion out of investing and replace it with a proven system. So what exactly it is, how does it work, and why are so many successful investors using it in 2025? So now let's go to the next page. The next page here says, what is dollar cost averaging? So now dollar cost averaging is an investment strategy where you invest a fixed amount of money at regular intervals regardless of the asset price. Instead of trying to time the market, you buy consistently. So whether prices are high, low, or in between, over time, this approach averages out your purchase price and reduces the risk of making one big investment at the wrong time. So you are not chasing market high or panicking during dips. You are just building steadily, bit by bit. So now let's go to the next page for more understanding. So here is an example. So let's say you want to invest $1,000 in Bitcoin, but you are worried about buying at the peak. So with DCA, you will break down the $1,000 into smaller chunks, maybe $100 every week for 10 weeks. So if the price goes up one week, you buy less. If the price drops the next week, you buy more. So over time, you accumulate more assets without stressing over daily price changes. So this strategy works across assets. So from S&P 500 index fund to Ethereum, Apple stocks, or even REITs. So that's how it works, guys. So now let's go to the next page. So the next page here says why dollar cost averaging works. So the biggest enemy of most investors is emotion, fears during crashes, greed during valleys, hesitation when the market feels uncertain. So DCA solves this by creating a disciplined, emotion-free system. You are investing on a schedule, so not based on feelings. You remove the pressure of guessing markets, tops or bottom, and because you are buying over time, you naturally benefit from market volatility. So getting more value when prices dip while growing when they rise. So that balance is key for long-term wealth. So now let's go to the next page. The next page here says perfect for beginners and stress-free. So if you're just starting out, this year is your best friend. You don't need to be an expert or watch charts all day. All you need is a budget, a schedule, and a reliable platform. So you can set it and forget it. So many investing apps like Robinhood, Fidelity, Binance, or Coinbase now let you set up automated recurring buys weekly, bi-weekly, or monthly. So you define the amounts, the assets, and the schedule, and the apps do the rest. So no second guessing, no emotional panic. So now let's go to the next page. The next page here says when DCA might not work as well. So DCA works best
Welcome
in
to RichTricks.
volatile
I am your
or
rich guru,
uncertain
Mr.
market.
Mio.
But if the
Let's
market
get
is in a
started with
strong,
today's
steady
video on
uptrend
making money
now,
online.
some investing, putting in all your money at once, can sometimes deliver higher return. Still, most people don't know when the market will rise or fall, so which is why DCA offers a safer, more consistent path. Also, if you are investing in highly speculative assets with no fundamentals, so DCA won't protect you from long-term losses. You still need to choose quality investment. So now let's go to the last page. The last page here says, so is dollar cost averaging still worth it in 2025? My answer will be yes, more than ever. So with the market as volatile and unpredictable they are today, so trying to time the perfect entry point is a recipe for stress and regret. So dollar cost averaging lets you build wealth quietly, systematically, and consistently without the mental gymnastics of timing the market. So it's how regular people grow portfolios that surprise them years later. So you don't need to be perfect, you just need to be consistent. So that will be all for today, guys. I hope you learned a lot from this video, guys. So if you learned a lot from this video, make sure you give a like and subscribe to our channel for more upcoming updates. So now thank you for watching and I'll see you next time. Hello guys, welcome back into another educative video, guys. So if you are new to this channel, make sure you like and subscribe, because on this channel we discuss about finances and how to make money online. So in today's video we are going to be talking about how to avoid crypto scams in 2025. Yes, how to stand out and not get your money taken from you. So now let's go to the next page. The next page here says the crypto world is full of opportunity, but it's also filled with traps. So in 2025, as digital assets become more mainstream and billions of dollars flows into the space, crypto scams are getting smarter, slicker, and more dangerous. So from fake exchanges and rug pulls to impersonation schemes and phishing attacks. So the scammers aren't slowing down, they are evolving. But the good news is, with the right knowledge, you can stay one step ahead. So here is how to spot and avoid crypto scams in 2025 and protect your money in the process. So now let's go to the next page. Number one here says beware of guaranteed return. So no legitimate crypto project guarantees profit. So scammer often lure victims with phrases like guaranteed daily returns, risk-free staking, or double your money in 48 hours. So in crypto there are no guarantees, only risk and reward. Any promise of fixed profits in a volatile market is a red flag. So real investing involves risk. If someone says otherwise, they are likely setting a trap. So beware of that. So now let's go to number 2 now. Number 2 here says always verify the website or app. So fake websites are everywhere in 2025. Scammers create clone popular crypto exchange or wallet with nearly identical URL and logos. So these sites may even rank on Google Ads or appear in fake YouTube tutorials before entering your private key or seed phrase anywhere. Double check the URL, look for the secure padlock icon, and consider bookmarking official pages. So better yet, go directly through trusted source or app store, not random links. So now let's go to the next one. The next one here says, protect your seed phrase like your life depends on it. Actually, your life depends on it. So, your seed or recovery phrase is the key to your crypto wallet. So, if someone gets it, they can drain your fund and there is no way to get it back. No real company, exchange, or wallet will ever ask for your seed phrase via email, phone, or support chat. So treat it like a master password. Write it down physically and store it offline. Never type or store it on your phone, computer, or in screenshots. So always protect your key seed. The next one now is, watch out for fake influencer airdrop. Scammers often impersonate famous YouTuber, crypto analysts, or project founders. They will use stolen profile picture, slight misspelling in usernames, and fake verification badges to trick people into trusting them. You might get a DM saying you've won a giveaway or be invited to an airdrop where you just need to connect your wallet. These are usually based for wallet draining, smart contracts, or phishing links. So when in doubt, ignore unsolicited messages. Legit giveaways won't ask for your private key or required payments up front. So now let's go to the next one. The next one here, which is the last one, says use reputable exchange only. So not all crypto exchanges are safe. Some are outright scams, while others are poorly managed and vulnerable to hacks. So in 2025, stick to top-tier regulated platforms like Coinbase, Binance, Kraken, or trusted regional exchange with a proven track record. So avoid the news unverified platform just because they offer lower fee or obscure token. So security and transparency are more valuable than low commission. So if you take use of all these steps listed in this video, then you are set up for life. You shouldn't get scammed in 2025. So make sure you give a like and subscribe to our channel if you enjoy our video, and I will see you next time. Hello guys, welcome back into another educative video guys. So if you are new to this channel, make sure you like and subscribe, because on this channel we discuss about finances and how you can make money online guys. So in today's video, we're going to be
Welcome
talking
to
about
RichTricks. I am your
saving
rich guru,
versus
Mr. Mio.
investing,
Let's get
which
started
build
with today's
wealth
video on
faster.
making money
So now
online.
let's go to the next page. The next page here says, if you're trying to build wealth, you've probably asked yourself, should I save more or invest more? Both sound smart, both have benefits, but the truth is they are not the same. And when it comes to building wealth faster, the difference is huge. So in 2025, with inflation rising, living costs increasing, and financial goals getting more ambitious, knowing whether to focus on saving or investing can change the entire course of your financial future. So let's break it down. So what I want to talk about now is, what's the difference between saving and investing? So saving means putting money aside in a safe, low risk place like saving account, emergency fund, or money market account. The goal is security, not growth. It's about preserving your money, so keeping it accessible and protecting it from volatility. Investing, on the other hand, means putting your money into assets that can grow over time, like stocks, ETFs, crypto, mutual funds, or real estate. So the goal is long-term growth with higher risk but much higher potential reward. So In short, saving equals to safety, investing equals to growth. So both are important, but only one can build wealth faster. So now let's go to the next page. The next page here says why saving alone doesn't build wealth faster. So in 2025, most saving accounts offers interest rates around 3% or less, even high yield ones. Meanwhile, inflation is hovering around 4 to 5% in many parts of the world. So that means your money in saving is actually losing value over time. So it's safe from market crashes, yes, but not from rising prices. So let's say you save $10,000 and leave it untouched in a bank account at 3% interest. So after 10 years, you will have about $13,400. But if inflation average 4%, your purchasing power has dropped. You technically lost money in real time. So saving is necessary for emergency and short-term goals, but if it's not a wealth-building strategy, it protects what you already have. It doesn't multiply it. So now let's go to the next page. Next page here says how investing accelerates wealth growth. So now let's compare that to investing. Historically, the stock market returned 7 to 10% annually after inflation. So that might not sound like much at first, but thanks to compound growth, it adds up fast. So if you invest that same 10,000 in a broad market ETFs that average 8% annually, in 10 years you would have about $21,600, more than double what you would get from a saving account. In 20 years, that number jumps to 46,600. So this is the magic of investing. Your money
Welcome to
works for
RichTricks.
you.
I am your
So now
rich guru,
let's go to
Mr.
the next
Mio.
page. It says
Let's
even
get
better
started with
if you
today's
invest
video on making
regularly.
money
Let's say
online.
$300 per month and average just 8% annually. In 30 years, you would have over $400,000, while saving that same amount in cash might leave you just a bit over $108,000, and even that would lose value to inflation. So now let's go to the last page. The last page here says, so which build wealth faster? The answer is clear. Investing build wealth faster. Saving protects wealth, but investing multiplies it. If you want to go ahead financially in 2025 and beyond, you can't rely on saving alone. You have to let your money work for you, not just sit in the bank. The earlier you start investing, the more time compound growth has to turn small amounts into serious wealth. So that will be all for today's video. If you like this video, make sure you give a like, so subscribe to our channel, and we'll see you next time. Hello guys, welcome back into another educative video guys. So if you are new to this channel, make sure you like and subscribe, because on this channel we talk about finances and how you can make money online guys. So in today's video we're going to be talking about how to create an emergency fund from scratch. So now let's go to the next page. Now the next page here says life happens and it usually doesn't end a calendar invite. So medical bills, job loss, car repairs, family emergency. When this moment hit, they hit hard. And if you don't have a financial cushion, they can push you into debt fast. That's where an emergency fund comes in. It's not just a saving account. It's your first line of defense against financial disaster. But what if you are starting from zero? Don't worry, here are exactly how to build an emergency fund from scratch, no matter your income, job type, or current situation. So now, why an emergency fund matters in 2025. So in today's world, financial security is fragile. Layoff happens overnight, so a single trip to the hospital can cost thousands. Inflation has made even minor emergencies more expensive, so credit card debt is rising, and relying on loans during a crisis only makes things worse. So an emergency fund gives you freedom, flexibility, and peace of mind. So it protects your future by letting you handle problems without wiping out your progress. So now let's go to the next page. The next page here says, step 1, set a realistic goal. So the standard advice is 3 to 6 months worth of living expenses, but don't let that overwhelm you. If you are just starting, aim small. A $500 or $1,000 starter fund is enough to cover most small emergencies like car repairs or medical copays. So once you are in place, you can scale up to cover 1 month, then 3, then 6. So the key is to start where you are, not where you wish you were. So now the next step here is open a separate savings account. Don't keep your emergency money in your regular checking
Welcome to
account.
RichTricks.
It's
I am
too
your
easy
rich
to
guru,
spend.
Mr. Mio.
Open a high
Let's
yield
get
saving
started with
account
today's video on making
specifically
money
for
online.
emergencies. Look for accounts with no fees, easy access, and better than average interest. So some offers 4 to 5% APY in 2025. So keep it separate, helps you draw a clear line. So this money is not for bills, shopping, or vacation. It's strictly for emergencies only. So now let's go to the next one. The next one here says step 3, track your monthly essentials. So before you know how much to save, you need to know how much you spend. List your non-negotiables: rent, food, utilities, transport, insurance, and minimum loan payment. So this gives you your baseline survival budget. Multiply that number by 1, 3, or 6 depending on your target. That's your emergency fund goal. So knowing this number helps you stay focused and realistic. So now let's go to the next one. The next one here says step 4, automate your saving. So building an emergency fund takes discipline, and automations make it easier. Set up a recurring transfer from your checking account to your emergency fund. So weekly or monthly, even if it is just $10 or $20. You can also use saving apps like Chim, Digit, or Capital that round up your purchases and stash the spare change. So the goal is consistency, not size. Small regular deposits will add up faster than you think. So let's go to the last one here. The last one here says use it only for real emergency. Define what counts as an emergency before one happens. Examples are job loss, unexpected medical bills, car breakdown, family crisis. What doesn't count? Sales, vacation, new gadgets, or upgrades. So when your fund is full, it's tempting to dip into it. But remember, this fund is your lifeline, not a backup checking account. Treat it with respect. That's actually true. So if you treat it with respect, it will actually reward you. So don't take out from your emergency fund account unless it is an emergency expenses. So that will be all for today's video. If you like this video, make sure you give a like and subscribe to our channel, and we'll see you next time. Hello guys, welcome back into another educative video guys. So if you are new to this channel, make sure you like and subscribe, because on this channel we discuss about finances and how you can make money online guys. So now let's get today's video started guys. So today's video we're going to be talking about ways to build credit score without debt guys. So that is what we'll be talking about guys, and you don't want to miss out on this video, so make sure you watch this video to the end. So now let's go to the next page now. So the next page here says most people think the only way to build credit is to borrow money and go into debt, but that's a myth. in 2025, there are smarter ways to boost your credit score without taking unnecessary financial risks. Whether you are new to credit, repairing past mistakes, or just want to improve your score without loans or balance piling up. So this guide is for you. So now let's break down how to build a strong credit profile without owing anyone a cent. So now let's go to the next one now. So number one here says use a secured credit card the right way. So a secured credit card is one of the safest ways to build credit without any debt. So you put down a refundable deposit, let's say $200, and and that becomes your credit limit. The trick: only spend a small portion of your limit, like 10% or less, and pay it off in full each month. So that way you are using credit without carrying debt. So over time, this builds a solid history of responsible use and your score will thank you. So that's the number one now. Let's go to number two. Number two here says become an authorized user. So if you have a trusted friend or family member with a long-standing credit card in good standing, ask to be added as an authorized user. So you don't have to use the card. Just being on the account can transfer their positive payment history to your credit report. So this is one of the easiest hacks for young adults or anyone starting from scratch. So just make sure the primary user never misses payment or it could hurt you instead. So now let's go to the third one. The third one here says pay bills through services that report to credit bureaus. So in 2025, several services allows you to get credit for paying bills you are already paying, like rent, phone, utilities, and even streaming services. So tools like Expectorian Boost, Grow Credit, or Stellarfy can link your regular payments and report them to credit agencies. You are not borrowing money, but you are getting credit for being responsible. It's a great way to improve your score with zero debt involved. So let's go to the next one. So the next one here says keep your credit utilization low. So credit utilization is the
Welcome to
percentage
RichTricks.
of your
I am your
available
rich guru, Mr.
credit
Mio.
that you are using. So
Let's get started
lender
with today's
low
video on making
utilization,
money online.
low risk. So if you have a $1,000 credit limit, try to stay below $100 in balances. That means 10%. So never max out your credit, even if you pay it off each month. High usage can still temporarily hurt your score. So staying under 10 to 30% shows discipline, so which boosts your credit profile over time without even needing a loan. So let's go to the last one here. So the last one on the list is always pay on time, no exception. So your payment history is the most important part of your credit score. So just one late payment can stay on your record for up to 7 years. So whether it's a small subscription, a utility bill, or a credit card, always pay on time. Set up auto pay reminder and calendar alerts if needed. You don't need to carry a balance to build credit. Just pay on time every time. So that will be all for today on our list, guys. So number 3 is my favorite. What's your favorite? Drop it down in the comment section, and thank you for watching, guys. We'll see you next time. Hello guys, welcome back into our channel, guys. So if you are new to this channel, make sure you give a like and subscribe to our channel, because on this channel we talk about how to make money online and you don't want to miss out on this type of video, guys. So let's get today's video started. So in today's video we're going to be talking about how to budget your way out of debt, guys. So debt is on the rise in 2025, guys, so you don't want to be in debt, guys. So today we'll talk about how to budget your way out of it. So now let's go to the next page. So the next page here says, debt doesn't just drain your bank account, it drains your peace of mind. And in 2025, with rising living costs, higher interest rates, and financial pressure coming from every angle, more people are feeling struck under debt more than ever before. But here is the truth. You don't have to stay there. With the right mindset and a smart, realistic budget, you can take control, pay it down, and build the life you actually want. So this guide will show you exactly how to budget your way out of debt, one paycheck at a time. So now let's go to the next page. The next page here says step 1. Face the numbers without fear. So you can't fix what you are afraid to look at. The first step to budgeting your way out of debt is to list everything you owe. That means credit cards, loans, overdraft, buy now, pay later balances, everything. So write down the balance, the interest rates, and the minimum payments for each. So don't judge yourself. This isn't about blame. It's about building a plan. So once you see the full picture, you stop guessing and start acting with purpose. So now let's go to step 2 now. Step 2 here says calculate your true monthly income. So next, figure out exactly how much money is coming in every month. Include your salary, side hustles,
Welcome to
freelance
RichTricks. I
works,
am your rich guru, Mr.
benefits,
Mio.
or any
Let's get
passive
started with
income.
today's video
Be
on making
honest
money
and
online.
conservative. So if your income varies, use a 3-month average. Knowing your real reliable monthly income is the foundation of any successful budget. So you need to know what you are working with. So now let's go to step 3 now. Step 3 here says track every expenses. Very important. Yes, everyone. So now track every dollar you spend. Rent, groceries, Netflix, transportation, snacks, subscription, bank fees. Don't estimate. Track it for at least 30 days. Use tools like Mint, YNAB, or a simple spreadsheet. So you probably find the leak in your budget. Money slipping away on things you don't even notice. These steps can be eye-opening. The goal isn't to shame yourself, it's to get clarity and identify where you can cut back without pain. So now let's go to the next step. Step 4 says build a zero-based budget. So a zero-based budget means every dollar has a job. You assign every dollar of income to a category until nothing is less accounted for. So that doesn't mean you spend it all. It means you plan it all. Start with essentials, rent, food, utilities, transport, then minimum debt payment. So then assign whatever's left toward extra debt payment, saving and small life upgrades. So if you are building to zero, you are controlling your money, not wondering where it went. So now let's go to the last step now. So step 5 says cut, pause, and reprioritize. So look for expenses you can temporarily cut or reduce. Cancel unnecessary subscription. Cook more meal at home. Delay big purchases. Avoid impulse buys. So remember, this isn't forever, it's just for now. Every dollar you free up is another step closer to freedom. Small sacrifice now equals to massive relief later. And don't forget to pause things that can wait. So you don't have to say no to fun. Just say not yet. So that will be all for this list, guys. So drop in the comment section your favorite step, guys, and thank you for staying in into this video. Make sure you like and subscribe, and I'll see you next time. Bye for now. Hello guys, welcome back to our channel. So in this video we're going to be talking about compound interest explained with real life examples. So if you're new to this channel, make sure you give a like and subscribe to our channel, because in this channel we discuss about finances and how you can get your finance right, guys. So now let's go to the next page now. So the next page here says most people overlook compound interest because it doesn't really feel exciting at first. There is no big splash, no instant payoff, but that's exactly
Welcome to
what makes
RichTricks.
it
I am your rich guru,
dangerous
Mr.
to
Mio.
ignore and
Let's get started with
life-changing
today's
when
video
you
on making money
understand
online.
compound interest. So it's what happens when your money starts working for you, and then the money it's earned also starts working for you. So it's slow in the beginning but unstoppable over time. The longer you leave your money in, the harder it works even while you sleep. So now let's go to the next page. The next page just says it's not just interest, it's interest on interest. So now the magic of compound interest lies in how it stacks. So you don't just earn interest on your original deposit, you earn interest on the interest it's already made. So if you invest $1,000 at 10% annual interest, you earn $100 in the first year. In 2 years, you are not earning another $100. You are earning $110, because now you are earning 10% on $1,100. Year 3, it will be $121. By year 4, it's $133.10. Every single year, the number grows faster without you doing anything extra. So now let's go to the next page. Next page here says letting time do the heavy lifting. Let's say you never touched that $1,000 and you let it grow at 10% yearly for 20 years without adding a single extra dollar. It turns into $6,700. That's the compound effect. Most people don't realize how fast money can grow when you leave it alone and stay consistent. The longer you give it, the more explosive the growth becomes. So that's why time is the most important ingredient. Not how much you invest, but how long you stay invested. So now let's go to the next page. The next page here says saving and investing aren't the same. Here is where things get interesting. Imagine two people, one saves $100 a month in a regular bank account at 0.5 interest. After 20 years, that will have about $24,000. But another person invests that same $100 a month in an index fund, averaging 8% return. After 20 years, they will have about $56,000. Same monthly effort, totally different results. The difference, one is sitting idle in savings, the other is compounding through the market. So that's how it works. So now let's go to the next page. The next page just says start early and you can do less. So this is where compound interest truly becomes magic. Let's take two friends. Lily starts investing $200 a month at age 20 and stop completely at 30. Mike waits until age 30 to begin and invest $200 monthly all the way to 60. So by retirement, Lily end up with more money even though she invested for just 10 years. Mike invested for 30 years, but because he started late, compound interest had less time to work its magic. So in the end, starting early beats investing more. So I hope you understand now. So now let's go to the last page. The last page here says time and consistency beats luck and timing. You don't have to be lucky. You don't have to wait for the perfect investment. You don't even need to be rich. With compound interest, all you need is consistency and time. So the earlier you start and the longer you stay in, the less effort you'll need. Small amounts, even $20 a week, can grow into life-changing money if given enough time. The secret is to stay consistent, ignore the noise, and let compound interest do what it does best. So that will be all for today's video, guys. So if you like this video, make sure you like and subscribe, guys. And thank you for tuning in into this video. I'll see you next time. Bye for now. Hello guys, welcome back into our channel, guys. So if you are new to this channel, make sure you like and subscribe, because on this channel we discuss about finances and investment, guys. So you don't want to miss out on our videos, guys. So make sure you like and subscribe to our channel. So now let's get today's video started. So today's video we are going to be talking about top mistakes new investors make and how to avoid them. So now let's go to the next page now. Next page just says, when people first enter the world of investing, it's usually with a mix of excitement and urgency. They've heard stories of people doubling their money. They have seen flashy YouTube videos and they want in fast. But in that rush, many beginners skip the basics, and that's where mistakes happen. The good news, every single one of these mistakes is avoidable. So if you understand them ahead of time, let's walk through the most common errors new investors make and how to dodge them. So now let's go to the next page now. So number one error here says trying to get rich too fast. So one of the biggest mistakes beginners make is chasing quick wins. They want to turn $100 into $10,000 overnight. So they pour money into meme stocks, obscure altcoin, or hot tips they had online. So sometimes they get lucky, but most times they lose big and learn a hard lesson. So investing isn't about speed, it's about strategy, time, and consistency. The real wealth comes from long-term compounding, not overnight gambling. So now let's go to the next one. The next error people make is that following hype instead of research. So it's easy to fall into the trap of buying what everyone is talking about, whether it's a trendy stock on Twitter or a coin that's exploding on TikTok. So beginners often mistake
Welcome to RichTricks.
popularity
I am your
for
rich guru,
potential.
Mr. Mio.
But just
Let's
because
get started with
something
today's
is
video on
trending
making
doesn't
money
mean it's a
online.
good investment. So if you can't explain what the company does or how the assets makes money, you shouldn't be putting your hard-earned cash into it. So real investing starts with real understanding. You need to understand what you are doing. Okay, you need to have a deep knowledge about investing before you can invest. So now let's go to the next one. The next mistake here says putting all their money in one basket. So new investors often make the mistake of going all in on a single stock or asset. Maybe they believe in a company future, or a friend convinced them it's a sure bet. But if that one thing fails, their whole portfolio crashes. That's why smart investors diversify. You spread your risk across different investments, so one bad move doesn't wipe you out. So the markets can be unpredictable. Your strategy shouldn't be. So now let's go to the next one. The next mistakes people also make is that not having a clear goal. They don't have a clear plan. So a lot of beginners start investing without asking themselves why. Are they saving for retirement? Trying to buy a house? Just curious. Without a goal, it's easy to jump from one thing to another, chasing returns but making no real progress. So a clear goal gives your investing journey direction. So it tells you how much risks to take, what account to use, and how long to stay invested. So no plan means no progress and no peace of mind. So now let's go to the last one we have on the list. The last mistakes people make is that ignoring fees and hidden cost. So some investments come with sneaky fees management and transaction charges, withdrawal penalty. So new investors often ignore them, not realizing how much they eat into return over time. Even a 1% annual fee can cost you thousands over decades. So always read the fine print. Choose low-cost platform, commission-free trades, and simple index fund when possible. So the less you pay in fees, the more of your money stays working for you. So that will be end of today's video, guys. So if you like this our content, make sure you give a like and subscribe to our channel, because we drop video like this every single day. So thank you for watching this video, and I can't wait to see you next time. Hello guys, welcome back to our channel, and if you are new to this channel, make sure you like and subscribe, because on this channel we talk about finances and how to get your money right. So we talk about finance, investment, and how to get your money right, guys. So you don't want to miss out on that, guys. So on today's video we'll be talking about business insurance type every startup must know. So now let's go to the next page now. So the next page here
Welcome
says
to RichTricks.
starting
I am
a
your rich
business
guru,
is
Mr. Mio.
exciting, but it's
Let's get
also
started
risky.
with today's
You are
video
dealing
on
with
making money
customers,
online.
contracts, employees, product, and sometimes even unpredictable situation. One mistake, accidents, or lawsuits can wipe out everything you've built. So that's why business insurance exists, to protect you when things don't go according to plan. For startup, especially, having the right insurance in place is not just smart, it's survival. So if you want to protect your brand, your money, and your future, these are the types of business insurance you absolutely need to know. So the first one here says general liability insurance is your first line of defense. So this is the most basic and essential coverage of any business. General liability insurance protects your startup if someone gets injured at your workplace, or if your product or service causes harm to someone else. It also covers things like property damage and even legal defense if someone sues you. Without it, one simple lawsuit, even if you did nothing wrong, could bankrupt your entire business. So most landlords, clients, and vendors even require this before working with you. It's a foundation of your risk management strategy. So now let's go to the next one. The next one on the list is professional liability insurance. Covers costly mistakes, also known as error and omissions (E&O insurance. So this policy protects you if a client claims you made a mistake, failed to deliver promised services, or gave them bad advice. It's a must-have for consultants, so coaches, designers, developers, lawyers, accountants, and anyone in a service-based business. So even if the client is wrong, you could still be dragged into a lawsuit. Professional liability insurance pays for legal fees and settlements, saving you from a financial nightmare. So the next one on the list is product liability insurance is essential for seller. So if you are a startup manufacturers, distributors, or sells physical products, you need product liability insurance. It protects you if your product causes harm to a customer, whether it's an allergic reaction, injury, or malfunction. So even if the issues comes from a supplier, your business can still be held legally responsible. Product liability insurance step in to cover claims, legal costs, and even recalls if needed. It's not just for big manufacturers, even small e-commerce brands need this protection. So now let's go to the next one. The next one here says commercial auto insurance isn't just for delivery drivers. So if your startup owns or uses vehicle for work, whether for deliveries, transporting equipment, or visiting clients, you need commercial auto insurance. It covers vehicle damage, accidents, liability, and even uninsured drivers. So personal car
Welcome to
insurance
RichTricks.
doesn't
I am
cover
your rich guru,
accidents that
Mr. Mio.
happens while
Let's
using
get
a
started with
vehicle
today's
for
video on
business
making money
purposes.
online.
So don't take the risk. Even if you only use a car occasionally for business, make sure you are covered the right way. And the last insurance you must have is key person insurance. Protects your startup backbone. So in a small startup, one person can be the entire engine of growth. If the person is you or a co-founder or top salesperson, their expected absence could seriously impact the company. So key person insurance is a life or disability insurance policy that pays the business if a key leader passes away or becomes incapacitated. So the money can be used to cover operational costs, hire a replacement, or buy time to restructure. So it's a way to keep the company running even if tragedy strikes. So that will be all for today. So if you like our list, make sure you give a like and subscribe to our channel. And thank you for watching. I'll see you next time. Hello guys, welcome back to our channel guys. So if you are new to this channel, make sure you like and subscribe, because on this channel we discuss about finances and investing guys. So you don't want to miss out on our next drop. So make sure you like and subscribe if you are new to this channel. So in today's video, we are going to be discussing about what is general liability insurance and why it matters. So now let's go to the next page. The next page here says, no matter how small your business is, you are never too small for risk. One unexpected accident, customer complaint, or property damage claim can turn into a costly lawsuit, and without proper protection, that lawsuit can easily wipe out your entire savings or shut your business down entirely. So that's where general liability insurance comes in. It's one of the most essential forms of business insurance, and for many entrepreneurs, it's the very first type of coverage they ever purchase. So now let's go to the next page. The next page here says why it matters more than you think. So many small business owners underestimate how quickly things can go wrong and how expensive a small legal issue can be. So if a customer trips on the loose tiles in your office, you could be sued for medical bills. If your delivery person scratched someone's parked card, you might be responsible for repair costs. And even if a client files a false claim, you could still rack up thousands in legal fees just to defend yourself. So, general liability insurance acts as a financial shield, giving you peace of mind and helping you stay focused on growing your business, not worrying about surprise lawsuits. So now let's go to the next page. The next page here says, it's often required before you can do business. So in many cases, having general liability insurance isn't just a smart move, it's a requirement. Landlords may ask for proof of coverage before renting you a commercial space. Vendors might require it before signing contracts. Clients, especially big companies, may not work with you unless you carry active coverage. Even event organizers like trade show or pop-up markets usually won't let you participate without a general liability policy in place. So if you don't have it, you are often shut out of opportunities. So now let's go to the next page. What it typically covers. So this type of insurance usually covers third-party bodily injuries, property damage, and legal expenses. So if someone inside your company gets hurt due to your business operations, like sleeping in your store, or getting injured by equipment you own. Your policy helps cover their medical bills and your legal fees. It also protects you if you accidentally damage a client's property while working at their location. So some policies even include coverage for advertising injuries, like a competitor accuses you of copying their marketing content or damaging their reputation. So now let's go to the next page. The next page just says what it doesn't cover. So it's important to understand that general liability insurance doesn't cover everything. It won't protect you against employee injuries. That's what workers' compensation's for. So it also doesn't cover damage to your own business property, which would require commercial property insurance. So if you are sued for professional mistakes like giving bad advice that led to a client's financial loss, you will need professional liability or errors and omissions insurance. General liability is your first line of defense, not your only one. So now let's go to the last page. The last page just says how much does it cost? So the cost of general liability insurance depends on your industry, business size, location, and level of risk. So a low-risk business like freelance writing or graphic design might pay as little as $30 to $50 a month. So a construction business or food service company could pay significantly more. The good news is that most insurers offer flexible policies that you can scale as your business grows. And when you consider how much a single lawsuit could cost, the price is more than worth it. So guys, that will be all for today's video, guys. So if you like our content, make sure you like and subscribe to our channel, and we'll see you next time. Hello guys, welcome back to our channel. So if you're new to this channel, make sure you like and subscribe, because on this channel we discuss about finances and how to get your money and business right, guys. So you don't want to miss out on our next drop. So in today's video we want to talk about best insurance for e-commerce businesses. So now let's go to the next page. The next page here says many income entrepreneurs think they don't need insurance because they don't have a physical storefront. But the reality is selling online comes with just as many risks, sometimes more, from product-related lawsuits to data breaches and supply chain delays. Unexpected problem can cost your business thousands or even shut it down completely. That's why having the right insurance is critical. So whether you are dropshipping, storing inventory, or building your own brand, there are specific types of insurance that every e-commerce business should strongly consider. So now let's go to the next page. The next page just says start with general liability insurance. So the first and foremost basic type of protection is general liability insurance. So this policy covers you if someone outside your company claims you caused injury or property damage. For e-commerce, that could mean a customer will claim your products injured them, or a situation where your business is accused of false advertising or copyright infringement. So even if the claim isn't valid, the legal fees alone can be overwhelming. General liability coverage gives your online store a layer of protection against these kinds of unexpected threats. So now let's go to the next page. The next page here says product liability insurance is a must-have. So if you sell physical products, especially ones that are shipped to customers, you need product liability insurance. This coverage protects you if your product causes harm or injury. Maybe a skin queen causes a reaction. Maybe an electronic gadget overheats. Even if the manufacturer is technically responsible, you can still be held legally liable as the seller. So this is especially true if you private label or rebrand the product. So product liability insurance helps cover legal costs, medical bills, and settlement, all without draining your profit. So now let's go to the next page. The next page here says cyber liability insurance protects your data and reputation. So when your entire business lives online, data is everything. You are collecting names, emails, shipping addresses, and in many cases, payment information. So that makes your site a target for hackers, data breaches, and phishing attacks. So if your customer data gets leaked, you could face lawsuits, fines, and a serious hit to your brand reputation. So cyber liability insurance steps in to cover the cost of breach notifications. So forensic investigations, customer protection, and even legal defense is one of the most critical policies for modern online businesses and one that's often overlooked. So now let's go to the next page. The next page here says transit and shipping insurance covers your inventory in motion. So if your product has been shipped from overseas, especially from countries like China or India, they are at risk during transit. So damage or lost inventory can wreck your revenue for the month. So shipping insurance or marine cargo coverage helps protect your product while they are on the move, whether by sea, air, or road. So some suppliers offers limited coverage, but having your own policies ensures that you don't bear the full cost if something goes wrong between the factory and your customers doorstep. So now let's go to the last one. The last one on the list says workers' compensation matters if you hire help. So even if you're running a small online brand, the moment you are hiring, whether it's the warehouse staff, customer service reps, or virtual assistants, you need to think about workers' compensation. These policies protect you in case an employee gets injured on the job. So in many regions, it's legally required once you hire your first team member, even if your businesses feel low risk. Having coverage in place build trust and show that you are running a legitimate, responsible business. So that will be all for our list today, guys. If you like our video, make sure you give a thumbs up and subscribe to our channel. So thank you for watching and I'll see you next time. Hello guys, welcome back to our channel. So if you are new to this channel, make sure you like and subscribe because on this channel we discuss about finances and businesses and how you can get your money right, so you don't want to miss out on our next show. So in today's video we're going to be talking about business insurance versus personal insurance, key difference. So now let's go to the next page now. So the next page here says on the surface insurance might seem like a one-size-fits-all concept. You pay a premium and you get protection when something goes wrong. But when you compare business insurance to personal insurance, you quickly realize they are built for two completely different worlds. While both offers financial protection, their purpose, structure, and coverage are designed to meet very different needs. Whether you are a freelancer, a small business owner, or someone trying to understand what insurance you actually need, knowing the difference is essential. So now let's go to the next page. So number one here says business insurance protects operations, people, and liability. So business insurance is designed to protect your company, not your personal belongings or family. It covers things like property damage to your office, lawsuits from clients, injuries to employees, data breaches, and business interruptions. So for example, if a customer slip and fall in your store, business liability insurance handle the legal and medical costs. So if your warehouse burned down, commercial property insurance helps rebuild. If your online store is hacked, cyber liability kicks in. These policies exist to protect your business abilities to operate, earn revenue, and survive legal or financial threats. So now let's go to the next page. The next page just says personal insurance protects you, your family, and your lifestyle. So personal insurance, on the other hand, is built around your individual life and household. So it includes auto insurance, health insurance, homeowners or renters insurance, and life insurance. Very important. So these policies are meant to protect your personal assets, such as your car, your house, your savings, or your income if you become ill or injured. So if your car is totaled in an accident or your home is damaged by a storm, personal insurance pays for the repairs. It's about giving you peace of mind on personal level, not a commercial one. So now let's go to the next page. The next page here says coverage amounts and limits are very different. So another big difference lies in how much each type of insurance covers. So personal policies tend to have lower coverage limits because they only need to protect one personal person or household. So business policies often comes with much higher limits because the risks are greater and the stakes are higher. So a small lawsuit against a business can cost tens or hundreds of thousands of dollars. So business insurance is built with that level of risk in mind. Personal insurance wouldn't be able to handle that kind of exposure. So now let's go to the next page. The next page here says liability risk is much higher in business. So running a business exposes you to public risk in a way personal life usually don't. So when you interact with customers, ship products, sign contracts, or give professional advice, you are opening yourself up to possibility of legal claim. So a client can sue you for negligence. A customer could get injured using your product. A supplier could claim you breached a contract. Personal insurance won't help you in this situation, so you need specialized business policies that are tailored to handle commercial liability. So now let's go to the last one on this page. So the last one for today is taxes and write-offs work differently for each. So personal insurance premiums typically can't be deducted from your tax, but business insurance, that's usually a tax deductible business expense. So if you are properly insured as a business, you may be able to write off the cost of your coverage, making it more affordable in the long run. So it's one of the many financial tools that can actually strengthen your bottom line while also protecting it. So that'll be all for today, guys. If you like our list, make sure you give a thumbs up and subscribe to our channel. I'll see you next time. Hello guys, welcome back to our channel, guys. So if you are new to this channel, make sure you like and subscribe to our channel, because on this channel we talk about investment and insurance and anything that will get your money right, guys. So you don't want to miss out on our next vlog. So make sure you like and subscribe, guys. So on today's video we're going to be talking about cheapest insurance options for freelancers. So now let's go to the next page. So the next page here says when you are a freelancer, you wear all the hats: the marketers, the accountants, the creator, the client manager, and yet the risk manager too. So you don't have an employer covering you with benefits or liability protection. So that means if something goes wrong, a client sues you, your laptop gets stolen, or you suffer a medical emergency, you are on your own. But that doesn't mean insurance has to be expensive. There are budget-friendly options that give freelancers solid protection without draining their income. So now let's go to the next page. So the first one I have here is general liability insurance is affordable and foundational. So for as little as $25 to $40 a month, many freelancers can get a general liability policy that covers them if someone claims they were hurt, experienced property damage, or suffered a loss because of your business activity. So for an example, if a client visits your home office and trades, or if you are accused of reputational harm through your content or marketing. This policy helps cover legal costs and settlement. It's not just cheap, it's often required by clients before signing a contract. So now let's go to the next one now. The next one here says professional liability insurance for service-based freelancer. So this also called error and omissions, E&O insurance. So this protects you if client says your work caused them a financial loss. Writers, designers, developers, consultants, and virtual assistants often need this. So if your work doesn't perform as expected, or if a missed deadline results in lost revenue for a client, you could be held liable. So fortunately, some providers offer professional liability coverage for under $30 monthly, and even bundle it with general liability for extra savings. So now the next one on the list is freelancer health insurance doesn't have to be overpriced. So many freelancers assume health insurance is out of reach, but there are ways to get affordable coverage. If you are in the US, platforms like healthcare.gov or your state's marketplace offer income-based subsidies that can make premium drastically cheaper. So if you qualify, you might pay less than $100 monthly for a solid plan. So alternatively, if you are young and healthy, a high deductible health plan, so combined with a health saving account, can reduce your monthly cost and give you a tax advantage way to prepare for medical expenses. So now let's go to the next one. The next one on the list says equipment insurance for your laptop and gear. So if your laptop, camera, or tablet is essential to your work, you can't afford to lose it. So instead of relying on homeowners or renters insurance, which may exclude business use, you can get standalone equipment coverage for your business tools. Plans start as low as $10 monthly. So depending on the value of your equipment, these policies covers damage, theft, and sometimes accidental loss. So giving you peace of mind every time you leave your gear in a cafe or co-working space. So now let's go to the last one. So the last one on the list is platform-based insurance that's built into the tools you use. So some freelance platform now offers optional insurance at affordable price. So for an example, Fiverr and Upwork have introduced policies that help cover professional liability or income protection. So QuickBooks and Honeybook also offer links to affordable insurance partners designed for self-employed professionals. So if you are using these tools already, check your dashboard. You might be able to sign up for coverage in minutes without any paperwork or long application. So there you go guys, you already have the information, so make sure you take use of it guys. And that will be the end of today's video guys. So make sure you like and subscribe if you enjoy our video, and I'll see you next time. Hello guys, welcome back to our channel guys. So if you are new to this channel, make sure you like and subscribe guys, because on this channel we discuss about finances and insurance and how you can get your money right guys. So you don't want to miss out on our next job guys, so make sure you like and subscribe guys. So let's get to this video started. So in today's video we're going to be talking about errors and omissions insurance and why it matters. So now let's go to the next page now. So the next page here says when you work in a service-based business, whether you are a consultant, web developer, writer, coach, or designer, mistakes can happen. Deadline can be missed. Deliverables might not meet expectations. Advice may not lead to the result your clients hoped for. And when those clients suffer financial loss and decide to sue, that's where errors and omission insurance comes in. So it's a type of liability insurance designed to protect you when your professional services or even the perception of a mistake lead to claims. So now let's go to the next page. The next page here says it covers mistakes viewed or accused. So E&O insurance step in to defend you if a client accuses you of negligence, oversight, bad advice, failure to deliver promised services, or even breach of contract. So these claims don't have to be valid for you to be affected. Just defending your business in court can cost thousands. So E&O pays for legal fees, settlements, and court costs so that one unhappy client doesn't destroy your finance and reputation. So even if you didn't technically do anything wrong, so this policy helps protect you from the cost of being accused. So now let's go to the next page. The next page just says what needs in and O insurance. So any professional who provide advice, creative work, or service to clients should consider E&O insurance essential. So these include freelancers, consultants, accountants, real estate agents, developers, marketers, and small business owners. So if your income depends on your professional judgment or deliverables, you are exposed to risk. So even one mistake or even just a client claiming they misunderstood your service can put your business in legal trouble. So E&O is about guarding your business against fallouts that can come from miscommunication, missed details, or plain old human error. So now let's go to the next page. The next page just says what it does not cover. So E&O insurance is focused on professional mistakes, not physical accidents or employee injuries. It won't cover bodily harm to someone else. That's what general liability insurance is for. So it also won't cover things like cyber attacks. You would need cyber liability insurance for that. So property damage or criminal acts, in other words, E&O is there to cover you when someone says you didn't do what you said you would and it cost me money. So now let's go to the next page. The next page just says what if it's especially critical for freelancers and small business? So larger companies often have legal teams and deep pockets to handle claims. But if you are a solo entrepreneur or small agency, just the cost of defending a lawsuit, even a frivolous one, could put you out of business. So E&O insurances give you a financial cushion and legal support. So in many cases, clients, especially corporate ones, won't even sign a contract with you unless you carry active E&O coverage. It's not just protection, it's part of proving you are a professional. So now let's go to the last page. The last page just says how much does it cost? So I knew you'd be expecting this question. So E&O insurance is surprisingly affordable. Yes, you don't need to be scared, especially for solo professionals. Premiums can start for as low as $25 to $50 per month, depending on your industry, risk level, coverage limits, and claims history. So many providers also offer bundled packages that include general liability and E&O together. So every new sale, while covering multiple risks, the cost is minor when you compare to the thousands or even hundreds of thousands you might face in damages or defense fees. So that will be all today in this video, guys. If you are new to this channel, make sure you give a like and subscribe to our channel, guys, and bye for now. Hello guys, welcome back to our channel, guys. So if you are new to this channel, make sure you like and subscribe, guys, because on this channel we discuss about finances, insurance, and how you can get your money right, guys. So you don't want to miss out on our next job, guys. So make sure you like and subscribe, guys. So in today's video, we're going to be talking about what insurance do you need to start a small business. So now let's go to the next page. So the next page here says when most people start a business, their minds are on branding, websites, customers, and making that first sale. But there is something just as important and often forgotten that could save your business from total disasters: insurance. It doesn't matter how small your business is. One unexpected lawsuit, accident or data breach can shut you down overnight. So the right insurance protects your money, your reputation, and your future. So if you are launching your first business, here are what you need to know about getting covered from day one. So now let's go to the next page. So here says general liability insurance, the first policy you should get. So this is the foundation of small business protection. General liability insurance covers you if someone gets injured because of your business, or if you accidentally cause damage to someone else's property. It also helps if you are accused of slander, libel, or copyright infringement. So even if you are working from home or only serve clients online, this coverage is essential. Clients often requires it before signing contracts, and it's one of the most affordable ways to protect yourself from expensive lawsuit. So now let's go to the next page. The next page here says professional liability insurance if you offer a service or advice. So this is also known as error and omission (E&O) insurance. So this policy protects you if a client claims your service caused them financial harm. Maybe a mistake in your consulting advice led to a loss. Maybe a design didn't meet legal standards. Even if you didn't do anything wrong, defending yourself can be costly. So professional liability insurance step in to cover legal fees and settlement. So if you are a freelancer, coach, designer, developer, or consultant, this is non-negotiable. So now let's go to the next page. The next page here says business property insurance protects your equipment and space. So whether you rent office or work from your kitchen table, business property insurance protects your physical tools. That includes laptop, inventory, printers, or any equipment you use to keep your business running. So if there is a fire, flood, or theft, this policy helps you replace what was lost. Keep in mind, your personal home insurance usually does not cover business related losses. So that's why a dedicated business policy is critical if you have valuable gear or inventory on hand. So now the next one here is cyber liability insurance, a must for online business. So if you collect customer data, take online payments, or use cloud-based system, you are a potential target for cyber attacks. So cyber liability insurance protects you if there is a data breach, hack, or ransomware attack. It helps cover costs like notifying customers, restoring data, and handling lawsuits. Even a simple phishing attack can shut your system down, and recovery is expensive. So, if you are doing business online in any capacity, this coverage is becoming just as essential as general liability. So, let's go to the last page here. The last page on the list says business owner policy, bundle and save. So if you are looking to simplify things, so many insurance providers offers what's called a business owner policy. A BOP bundles several key coverage, typically general liability, business property, and sometimes business interruption into one affordable package. So it is tailored for small businesses and can be more cost effective than buying individual policies. So if you are just getting started, this is one of the smartest way to protect yourself without overpaying, guys. So that will be all for our list today, guys. If you like our list, make sure you give a like and subscribe to our channel, guys. Thanks for watching. Hello guys, welcome back to our channel, guys. So if you are new to this channel, make sure you like and subscribe, because on this channel we discuss about finances and insurance and how to get your money right, guys. So you don't want to miss out on our next job, guys. So subscribe to our channel so that anytime we drop, you will be the first person to know, guys. So in this video, we're going to be talking about how to file a business insurance claim the right way. So now let's go to the next page here. So the next page here says, no one wants to file an insurance claim, but when something goes wrong in your business, how you respond in those first few hours can make or break your financial recovery. So whether it's a burst pipe in your office, a stolen laptop, a lawsuit from a customer, or a product mishap, knowing how to file a business insurance claim the right way ensures your losses are covered quickly, so fairly, and without extra headaches. So filing isn't just about paperwork, it's about protecting your operations and peace of mind. So now let's go to the next page. So the step 1 here says, act fast and document everything immediately. The moment something goes wrong, time becomes your most valuable asset. So as soon as you discover damage, theft, or receive notice of a lawsuit, begin documenting everything. Take photos or videos of the damage. Save police reports if there has been a theft or accident, and keep all receipts and invoice connected to the loss. So this evidence becomes your strongest support during the claims process. So even if you are still trying to process what just happened, gathering clear proof early on makes your claim harder to dispute. So now let's go to the next step. So step 2 here says, notify your insurance providers right away. So most policies require that you report on incidents within a certain time frame. So sometimes 24 to 48 hours. Waiting too long can lead to delays or even denials of your claim. So contact your insurance agent or provider directly and provide an overview of what happened. So they will likely assign a claim adjuster who will guide you through the next steps. So be clear, concise, and cooperative. So the sooner they look in, the faster they can begin assessing your situation and determine how much coverage you are entitled to. So now let's go to the next step. So the third step here says, fill out the required claim forms accurately. So after you make the initial report, your insurer will send you official claims form to complete. Take this seriously. Provide every detail requested: dates, estimated losses, involved parties, supporting documents. Make sure the numbers match the invoice or receipt you are submitting. So errors, vague answers, or missing documents can lead to delays or even partial payout. So if you are unsure about anything, ask your claim adjuster for clarification before submitting the paperwork. So feeling thoroughly is part of feeling smart. So now let's go to the next page. The next page just says, step 4, cooperate with the insurance adjuster's investigation. So once your forms are submitted, your provider will begin investigating your claim. A claim adjuster may visit your business site, speak to witnesses, inspect damaged property, or request additional documentation. This isn't about distracting you, it's about verifying the facts. Be honest, organized, and available. So if you've kept strong records and documented everything, the process will move more smoothly. Remember, the adjuster isn't your enemy. Their job is to assess the loss fairly based on your policy. So now let's go to the next step. So step 5 says, understand what your policy actually covers. So before the payout is finalized, your insurer will match your loss agent against your policy coverage. So this is where many business owners is surprises. So maybe you assumed your policy covered water damage, but it only applies to fire. Maybe there is a deductible or coverage cap you didn't notice. So to avoid disappointment, review your policy's fine print early. So ideally before anything goes wrong. So if you are unsure what's covered, your agents can explain what applies to your specific claims and what doesn't. So now let's go to the next page. So step 6 here says track all expenses during the recovery process. If you have a business interruption coverage, you may be eligible for reimbursement of lost income or extra operating expenses such as renting temporary office space or outsourcing key service while you recover, but you need proof. So keep every invoice, receipt, and emails tied to your recovery efforts. Create a digital folder or spreadsheet to track everything in one place. So the more details your documentation, the easier it is to prove your losses and the faster your reimbursement will come. So now let's go to the next one. Step 7 here says stay in touch until the claim is resolved. So don't assume silence means progress. Follow up regularly with your adjuster to track your claim status. Ask for updates. Confirm when you will receive decision and clarify next steps. Many claims can take a few weeks to process depending on complexity, but staying visible and organized shows that you are serious and keeps things moving. So if a settlement offers comes in, review it carefully and don't be afraid to ask questions if something seems unclear or missing. So now let's go to the last step. So the last step on the list is step 8. Learn from the experience and update your coverage. So once your claim is resolved and your payout is received, take a moment to evaluate how things went. Were you underinsured? Did you face delays because of missing documents? Did you misunderstand part of your policy? Use this experience as a chance to fine-tune your insurance strategy. You might need to raise your coverage limit, add a rider for specific equipment, or bundle in cyber protection. So the best time to fix insurance gap is after a claim, not before the next one. So that'll be all for today in this video, guys. If you like our video, make sure you give a thumbs up and subscribe to our channel. Thank you for watching. Hello guys, welcome back to our video, guys. So if you are new to this channel, make sure you like and subscribe, because on this channel we talk about finances and insurance and how to get your money right, guys. So you don't want to miss out on our next drop, guys. So make sure you like and subscribe, guys. So in today's video, we're going to be talking about top 5 insurance companies for business owners in 2025. So now let's go to the next page. The next page here says choosing the right insurance provider isn't just about picking the cheapest premium. As a business owner, you need a company that understands your industry, responds fast when something goes wrong, and offers flexible coverage that scales as you grow. So the best insurance companies in 2025 combine strong financial backing with digital convenience, personalized service, and real-world protection. So here are 5 top rated and most trusted insurers that business owners around the world are relying on this year. So number 1 here says East Coast, perfect for freelancers and small businesses. East Coast has built a strong reputation as the go-to insurance for solo entrepreneurs, consultants, and small business owners. So their platform makes it incredibly easy to get a quote, purchase coverage, and manage your policies entirely online. Whether you are a freelance designer or a small e-commerce brand, East Coast offers tailored packages like general liability, professional liability, E&O, cyber insurance, and business property. So they are especially good for businesses with 10 or fewer employees, and they are and their monthly pricing is flexible and transparent. If you are just starting out or working solo, these courses offer excellent value without red tape. So number 2 here says Next Insurance, fast, digital and built for today's business. Next is one of the most modern and took forward insurance providers for small businesses in 2025. They offer 100% digital quotes, instant certificates of insurance (COI), and competitive price with zero hassle. So you can bundle general liability, workers' comp, professional liability, tools and equipment coverage, and more. So all from your phone or laptop. So Next is particularly popular among contractors, cleaners, real estate agents, fitness instructor, and gig workers. It's built with speed and convenience in mind without sacrificing quality or claims support. So now let's go to number 3. Number 3 here says Shoop. It is ideal for growing businesses and global coverage. So if your business is scaling quickly or operates internationally, Shoops is a powerhouse insurer with global reach and serious financial strength. They offer comprehensive coverage for medium to large businesses, including product liability, cyber insurance, business interruption, and specialty risk policies. So Shoop is known for its white glove service and high claim satisfaction rate, make it a favorite for companies with complex need or custom supply chain. With their policies aren't the cheapest, they are incredibly thorough, perfect for businesses that want protection at scale. So now let's go to the next one. Number 4 here say the Hartford, trusted by US business owner for decades. For decades, the Hartford has been a top choice for small and mid-sized businesses in the United States. In 2025, they continue to offer strong business owners policies, general liability, property insurance, commercial auto, and workers' comp. So what makes the Hartford stand out is their excellent customer service and wide network of agents who understand local industries. They also offer risk management support and industry-specific advice for construction, healthcare, retailers, and professional services. If you want a well-established insurer with proven reliability, the Hartford delivers consistency and trust. So let's go to the last one. The last one on the list is Travelers, strong all-around coverage for established business. Travelers Insurance is another major player with a solid reputation in commercial insurance. So they offer robust packages for businesses of all sizes, including niche markets like tech startups, wholesalers, and manufacturers. So Travelers is known for its flexible underwriting, excellent claim response time, and detailed policies option. Whether you need umbrella coverage, inland marine, or industry-specific endorsement, Travelers has the infrastructure and expertise to handle it. They are a great fit for businesses that are growing fast and need a more tailored insurance policy. So that will be all for today, guys. Now you have 5 top best insurance company in the United States, guys. So choose the one that works for you and have fun with it. If you like our video, make sure you like and subscribe, guys, and I'll see you next time. Hello guys, welcome back to our channel, guys. So if you are new to this channel, make sure you like and subscribe, guys. So in today's video, we'll be looking at this article by nail.com, guys. So here it says, can I use my personal insurance policy for business related claims? So the simple answer to this is no. Typically, you can't use a personal insurance policy for business related claims. So personal insurance policy such as homeowners, auto, or personal health insurance are designed to cover personal risk and asset, not business activities or assets. So here is why using personal insurance for business claim probably won't work. So the first one says coverage exclusion. Personal insurance policies usually spell out exclusions for business related activities. So this means if you try to make a claim for something that happened while you were conducting business, your insurer is likely to deny it. So the second one here says risk assessment. So insurance companies assesses risk differently for personal and businesses policies. So businesses activities often carry higher risk which aren't accounted for in personal insurance premiums. So the third one says policy limits. So even if a personal policy doesn't explicitly exclude business activities, the coverage limits may not be enough to cover business related losses. So the fourth one says potential for non-renewal or cancellation. So if your insurer discovers you are using a personal policy for business purposes, they might not only deny the claim but also cancel your policy or refuse to renew. So now the next one here says, is business insurance necessary for home-based businesses or is personal insurance sufficient? So it may not be tempting to think you don't need business insurance. So if you run a home-based business but failing to get the right insurance policy can turn out to be an expensive oversight. So while personal insurance policies cover the individual and their personal assets, they typically don't provide adequate coverage for business activities and assets. So here is why you may need a business owner policy even if you operate your business from home. So the first one says business property coverage. So personal homeowners insurance usually has limit coverage for business equipment and supply. So if you have significant business property like computers, printers, inventory, or tools used for your business, a bulb can provide the necessary coverage for these items. The second one here says liability protection. So if clients or customers visit your home for business purposes, personal liability coverage may not protect you if someone is injured on your property. So a bulb includes general liability coverage which can protect against such incidents. So the third one here says professional risk. So home-based businesses might face specific professional risks like data breaches or business interruption which are not covered under personal insurance policies. So a bulb can include coverage for these risks. So the first one, which is the last one, says if your home-based business suffers from an event that disrupts operation, a bulb can provide business interruption insurance to cover lost income and ongoing expenses, something personal insurance does not offer. So the bottom line is you probably need both personal and business insurance. If you run a business, you may think you can wait until something happens, but you can't get insurance retroactive. So think of insurance as an essential cost of doing business and one step in creating a viable business for a long run. So if something does goes wrong, you will be glad you have it. So take the next step for your business insurance need and get the protection your business. So that will be all for this article, guys. So if you like our video, make sure you like and subscribe, guys, and thank you for watching.